Hi, this is Zach here with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 14th of September. Starting off with the FTSE 100, where there is disappointment in the air. We didn't make it up to that resistance line there from back in April, around 75.50. And we're currently trading just below the 50-day moving average, around 73.47. I'd like to see an end-of-day close back above the 50-day line, which is still rising. The 200-day line rather flat now, but still got the chance of both rising into a golden cross, although obviously that seems rather unlikely. It looks as though we might have to have a retest of the two-year uptrend line around 72.10 before we go up again. If we do go up again, obviously it's about 5 times that we failed to get through that April resistance line, so maybe that is a problem. But at least that uptrend line from 2 years ago has held. RSI back below 50, which again is not a good look. We were in the mid-50s yesterday, and did seem that normally actually a market will then rise from that particular setup. But as I said, the likelihood here is a retest of the 7200 zone and that 2-year support line, but really in a range between 72 and 75 at the moment. On to Bitcoin, which was showing some efforts in terms of rehabilitating itself. But again, here we've also had a situation where the market has come back from the best levels. Just trying to get the correct chart there, and there it is. The November falling trend channel there, the failure there around 22,600 also failed to get through or hold above the 50-day moving average around 22,000. So we're back in that sort of mini range between 19 and 25,000, I suppose. We still need to break that resistance line there from November, and that would be the trigger around 23,500 to possibly get up to the 30,000 area as a best case scenario target, which is where we tested the resistance back in March. Everything here, though, depending on 19,000 holding, and obviously Bitcoin starting to track what we see in the equity market, so equities up and Bitcoin up, etc., etc. Going on to the stocks, and one of the most puzzling situations of the year to date has been Audioboom. Possibly not that puzzling if you wanted it to go down. It's obviously gone down from a double top at £22 down to, I think, below the £5 level yesterday at the lows, 480 or so. Current situation is that got the hint of some bullish divergence, and hence that might have been the explanation, the technical explanation for yesterday's rise. But old support there from July at £6.10, that was exactly the high yesterday. So old support becoming new resistance is what you see in a bear move, not in a bull move. So an end-of-day close above 610 is required as a minimum to get this starting to turn around. Got a resistance line there from June around 675, which seems rather a long way away, and then the 50-day line 725. And as you can see, we haven't been above the 50-day line there since the beginning of May. That looks to be now the minimum requirement for a serious turnaround in the shares, even if we get the 610 plus or 675 plus. And still can't rule out further downside, given that the RSI currently around the upper 30s or mid 30s rather is not yet oversold. Moving on to a happier situation, Carefree Minerals, and here we had a situation where there was bullish divergence, and there has been bullish divergence going into the latest rise, which effectively doubled the share price. The bullish divergence, really that August-September move there in the RSI window. What will be key now is that we hold around the 4.5 pence area, the area of the 50-day moving average, to break the recent downtrend in the move. You can see on previous occasions over the last year, any push above the 50-day line has been sold into, and maybe today we need to try and break out of that pattern. 4.6 above that and above the 50-day line, we've got the chance of perhaps a move towards 8 pence, which was resistance on the way down back in June. Otherwise, there's a risk again of a sub 3 pence dive. Onto a stock which has been able to break its 50-day line, sort of slightly, let's say, is Cloudbreak, we had the end of day close above that line yesterday at around 1.8 pence, hovering around that area today. We need to hold that on an end of day close basis again, really, to get to the 2.25 pence zone, which was resistance on the way down back in July, and perhaps that would happen over the next couple of weeks. Back below 1.5, and then we're risking heading back to the lows of earlier in the month, near 1.3 pence. Onto a situation which has also been slightly troublesome over the recent past, Eureka Mining, but one of the triggers, potential positive triggers, was the chance of an improvement in the Russia-Ukraine situation. Clearly that was the reason, or the main reason, that the shares fell away at the end of February, and we haven't been above the 50-day moving average basically since yesterday, which yesterday we had an end of day close above the 50-day line. That's also rising as well, and today so far very strong price action, opened at the low, so far at the high of the day, which is pretty impressive. Now the chance of at least a retest of post-May resistance around 9 pence. Best case scenario would be up to the 200-day moving average at well, just shy of 12 pence. We haven't been above that since back in January. So there is, or there are stirrings of improvement here, especially since the beginning of the week. Monday was a key reversal up, and then yesterday the break of the 200-day line. So looks as though the least we'll see is around 7.25 pence, which was July resistance, ideally back up to 9 pence, maybe by the end of next month, if the current rally can be maintained as it has been. But that 50-day line rising, it's the first time it's done that for a long time, could be taken as some as a very good signal. Moving on to Estar, and here again, good noises from the stock on the technical front. We've got the 50 and 200-day moving averages rising. It looks as though we've got an imminent golden cross between them, so that would be maybe before the end of the week. Nice progression over the last couple of months, with new support coming in above old resistance. We had that last month and so far this month. And that means that the prospect of a move up to 7.5 pence at the top of that broadening triangle from January is very much on, and could be seen over the next 2 to 4 weeks. Stop loss on this just back below the 5 pence level on Estar. Got a requested stock from one of my long-standing followers. I think somebody's been following me since the zaxta.com era, which was over 10 years ago. So maybe he's been around for 20 years. Must be a senior citizen now. But he asked for Glaxo, and here it is. A rather nasty decline for the shares, and we're in this, looks like a bear flag, really, bear flag formation. Top of that flag up at 13 pence. We'll call it 13.8 pence. The bottom there around the 13 pence level. So we've got the risk of a final dip down towards the 13 pounds area. Let's get that right. And we've got a slight uptrend in the RSI window. So perhaps we'll have a coincidence of bouncing off that RSI uptrend line from August, and also the 13 pound area. So if the 13 pound area can hold, then Glaxo may be out of the woods for a temporary period. Otherwise, we're just looking for a simple break of £13.80 to take the shares back up to the 50-day moving average area, currently around 15.60. But everything really hinging on this stock not falling out of that bear flag that we've got there at the moment. Moving on to Inspirit, and here a very difficult chart to make any analysis on, but we are nominally in a rising trend channel. That's been there for the last year. Floor of the channel around 0.02 pence, and the top of the channel 0.08. And what tends to happen here, as we've seen in stocks like UK oil and gas, is that any spike is sold into after a couple of days. We've had the rally today, so presumably we could get up to 0.07 or 0.08, and then the sell-off would come again. If we can break that pattern of 0.02 to 0.08, then there may be a breakout, but at the moment probably one would back just the idea of a sell into strength happening again on Inspirit. Market newcomer next in the form of Kendrick, and here a bit like Cloudbreak, we've broken the 50-day moving average. That might be significant. That was around 1.5 pence, so above 1.5 pence, looking for at least 2 pence, which was resistance on the way down back in June. and let's see if Kendrick can come up the goods. We come off very, very oversold territory as well, so looks as though there may be a little bit of a rally here for Kendrick over the next couple of weeks, but everything hinging on holding the 50-day moving average area. Celebrating one of the stocks which has done rather well of late, we've got MC Mining. I think we've been following this up from the mid or low teens, gap higher or gaps higher for the shares, and 35 pence was the target sort of suggested earlier this month. Could get up to 36 or 37 pence the way things are going. If you're ambitious about the stock and think that there may be further gains, then perhaps up towards the top of the rising trend channel that I'm attempting to draw at the moment. That would be quite an escalation in the rally, but we could see a decent move even above what we've seen at the moment. That resistance line there from July heading towards the 45 or even 50 level, so above 35, you've got the possibility of 50 pence, but obviously we've had a very big rally so far. Stop loss on the upside at the moment around the floor of the latest gap at 25, so above 25, let's say that the best case scenario here is up to 50 pence for MC Mining. On to a stock which has been rather hit of late, Phoenix Copper. But the reason for the inclusion today is there is a bit of bullish divergence. So we had made a new low there just towards the 20 pence level late last week. And the RSI has been higher. So possibility of breaking that 50-day moving average and maybe heading into the low 30s there for Phoenix Copper, if we are lucky. Otherwise, it's just a retest maybe of the low 20s once again. Let's see how that pans out. Moving on to Transense, which hasn't had a look in here for quite some time, but we've gapped up off the lows and off the floor of that falling wedge. Bit of bullish divergence there as well, which explains the push to the upside, and above 56 pence looking for the 200-day moving average at 70 pence. Best case scenario, if this is the big turnaround, then up towards 95 pence, maybe on a 1 to 2 month time frame. But early days yet, and we really need to hold that 56 pence level and the 50-day line. Finishing off with a stock which has been, I think, treated rather harshly by the market, and maybe that's still the case. Had a brief spike through the 200-day moving average for Vela yesterday at 0.03 pence. We need to hold above the 50-day moving average on an end-of-day close around 0.02.5. If we can do that, then it might be the sign or a suggestion that we're going to turn around and maybe head up to 0.04, something like that, over the next few weeks. But it's certainly a stock which has been in a very strong bear trend, and any strength so far has been sold into. That's it for me today. More updates tomorrow.